welcome. Thank you so much for joining us here today for part 2 of Claiming Social Security from Australia. I'm Ashley Murphy, the founder and principal advisor of Arete Wealth Strategists Australia. I'm thrilled to be joined here today by John Versace, a CFP who heads up the international desk at Apt Wealth Partners, offices in Melbourne, Sydney, and also Geelong. Did you guys add an office there recently?
Actually, it's been a small office down in Geelong for quite a while.
Okay.
Actually, a smaller part of the office, but the business, but main offices in Melbourne and Sydney. And yeah, thanks for having me along, Ash. It's great to be joining you.
Absolutely. All right. So let's get into it here. Just wanted to share with you my disclosures, and that is, of course, this does not constitute personal financial tax or investment advice. That is something that I provide to my private clients. Today is just for general information. If you like what you're hearing from John and myself, then please don't keep us a secret. Let others know about us, and we'd be happy to help them if their case warrants. And John, maybe you wanted to say something about your...
Sure. Yeah, very same, a very similar thing from us as well. It is general advice. We haven't considered anyone's personal circumstances, and this shouldn't be seen as a substitute for personalised advice. So please do reach out to a suitably qualified professional if you are looking for personal advice.
I should mention also that following today's presentation, this will be made available on my YouTube channel, which you can find, of course, on YouTube. And there's several dozen, there's about 50 videos relating to all manner of sorts of different topics. I'll mention next month's presentation at the end of today's presentation. But it's to do with tax-effective gift giving across borders. Okay, so a little bit about me. So really, these cross-border financial issues have been with me from birth. I'm a tri-citizen of Australia, the UK, and the US. I grew up here where I am currently in Brisbane, Australia. I'll be moving back to Minnesota in about 6 months' time. Graduate of University of Queensland. It really wasn't until 2008 where I saw the light and found my calling as a financial advisor. The story to become a financial advisor, I think, is an interesting one. I went interviewing financial advisors around 2002 after an inheritance and a settlement, and I just found that these advisors were just so salesy. They were driven to sell the proprietary product of their firm, and I really didn't feel that they were aligned necessarily with my interests. And so when I learned about a type of financial advisor that exists in the United States, that's known as a registered investment advisor. Since 1940, they've had a fiduciary obligation. That's the highest legal standard to put their client's best interest first. And so in the US, there still remains 3 different kinds of advisors. And I'm proud to say that we're a fee-only fiduciary registered investment advisor, as John's firm is also Apt Wealth Partners. I've presented on this topic at various conferences, and Australia actually now leads the world in terms of consumer protections for financial advice. So that sure feels good. A little bit of background to John and myself, and I should mention is that even though I'm physically present in Australia right now, my firm is a US company. We have a financial services license in the US. We do not have a financial services license in Australia. For clients whose financial affairs are predominantly Australian, we would point them in John's direction. Whereas if someone's financial affairs are predominantly American, that's where we would be able to help. Of course, both John and myself are able to talk the language and understand the implications of financial matters in either country, but that's the situation. So we work together with joint clients, and depending on who you speak with, we may refer you to one or the other, given what we deem to be the primary gravity of your financial life. Anyway, that's me going a little bit off script there. John, maybe you'd like to say a few words about your background.
Yeah, excellent. Thanks for that, Ash. So the firm I work for, Apt Wealth Partners, is a reasonably large firm, but I head up the Expat services team within Apt Wealth. So it's a team of dedicated professionals that is solely focused on the expat communities, either migrants to Australia or Australians living abroad, and it is predominantly, 75 to 80% of it is US taxpayers. So the US citizens living in Australia and the Australians living in the US. So we, have a very strong understanding of some of the complexities that are faced with US taxes and Australian assets and financial management, and that's something we've got a specialty in navigating. It's something I've been doing, for around 6 years now, and has essentially just become my sole focus as the head of the Expat Services team. And as Ashley mentioned, we work together, and we're solely licensed in Australia, so we can only provide advice on Australian assets and Australian financial matters, and obviously defer to Ashley for the US side of things, where there's US assets. And sometimes we're appropriate, work together with Ashley where there's assets in both locations that that need advice and management. So that's a little bit about myself and our firm.
All right, wonderful. Thanks for that. Some example of the kinds of clients and issues that we work with. You see 3 here in that left-hand column. So the Aussie business owner living in the US, the high net worth Australian family currently living in the US, and the Aussie executive family that is permanently relocated to the US. So there's some examples of the kinds of goals and the results that we've been able to achieve for them. Moving on. Okay, so today's presentation, you can see in that teal color at the top and bottom of the screen, we've got a couple sections John will be going through, and the ones in the middle, 4, 5, 6, 7, 8, and then also 11. I've tacked on a real world case study I think you'll all find very relevant and informative. But John's going to start us off just giving us a refresher on what is Social Security and who may be eligible for that. Next, moving on to Social Security for returned Aussies or Americans abroad. Can I receive Social Security if I'm not in the US? Then I'll be talking about what if my spouse and or dependents never lived in the US? Might they be entitled to benefits? Limitations on paying US Social Security benefits to foreign bank accounts. How do the mechanics of that work? Earning US Social Security benefits for those who work outside of the US. So how does one continue to vest into Social Security if you're not actually in the US? That's a nice lead into totalization agreements and what they are and what impact they might have on you. What is the windfall elimination provision and the commensurate reduction of benefits? You want to make sure you stick around for that, because that is something that I've learned a lot about just in recent times with some interaction that I've been having with the Social Security desk abroad, and I'll introduce what that government bureaucracy is called and how to contact them. Next, John will be going through what country has taxing rights on your Social Security. Can I get both? John and I have had a lot of fun talking about this hypothetical scenario. Can I get the Australian age pension and Social Security benefits? I think people are drawn to this mirage, the possibility of getting Social Security and an age pension and then moving to Bali and just living, the high life as what they call in the US a pensionaire, enjoying both of them. But we'll show you that that's not only is it nearly impossible to engineer, but you really wouldn't want to do it anyway. And then lastly, I'll relay to you with names changed and keeping confidentiality, a fellow financial advisor who I know, who provided me with a real world case example of how she's gone about applying for Social Security for her non-US citizen husband, who happens by chance to be Australian. So let's kick it off. John, tell us about Social Security. What is US Social Security?
Yeah, so I mean, the official title for it is the Old Age Survivors Disability Insurance Program, which not many people would know or know it as. I mean, it's universally known as Social Security in the US, and essentially it's the US federal government's retirement scheme, and essentially it is an income stream that you can draw from retirement, which or from age 62. The latest age you can draw it is age 70. So you need, and the payments will increase the later you take it. So there's some planning potentially in that. It comes out of the pay packet every month. There's a tax that comes out every month that you will see come out of your pay packet, which is your contribution to Social Security, it's almost universal now. So, there's very few parts of the US workforce that won't be covered through Social Security. Only some state-based organisations that or government bodies that have a slightly different scheme, but it is almost universal across the US. Important thing is that it's an earned entitlement, so it's not very different to the Australian system, which I'll touch on a little later in the session. Where the Australian system is more of a welfare system and based on whether you essentially need government support to be able to live a retirement. US Social Security is an earned entitlement that essentially, if you meet the qualifications of the 40 quarters of coverage, then you will qualify for Social Security. And as we've got on there, even Warren Buffett, multi-billionaire, doesn't need any extra money, but he qualifies for a Social Security benefit. So it's not linked to your assets or income. Even the very wealthy Americans receive it as well. And it's huge, that the payment that is coming from Social Security each year is in the trillions now, so it's a huge payment each year that's been paid by the federal government out to retirees. So maybe just moving on to the next slide there, Ash. Now, a very important point and a very common misconception of Social Security is that many think that you have to be a citizen or a resident in the US to qualify for Social Security. You definitely don't need to be a US legal citizen or resident or green card holder. It is tied to meeting the periods of coverage. There are US citizens that have renounced their citizenship and moved abroad and still qualify. There are Aussies that have worked in the US and come back home to Australia and qualify. So it's not tied to your legal status. Now, we'll go through a little bit about where you can reside in the world a bit later. But essentially, in terms of your legal status with the US, you do not need to be a citizen or green card holder to qualify for Social Security. Now, there is a government website that you can check your Social Security status and how much there is a system in terms of working out how much you will receive each payment. And again, it's dependent on periods of work, income, through the periods of work, and also what age you draw down your Social Security. So there is a calculation method. Easiest way to determine what you will qualify for is to log into the government website that's on your screen there, and you may need to register, but you'll be able to see what your entitlements will potentially be, and there can be some estimates as well on what potential future value you will get. So just going on to the next slide here. So claiming your Social Security from abroad is an interesting one. So you don't necessarily need to be in the US to actually claim it. You can claim it from abroad, and the officers that do handle this are known as the Office of Earnings and International Operations, which is tasked with making sure that you can apply for your Social Security from abroad. Now, Ash is going to show us the Australian office, which is conveniently located in Manila. So it's an interesting one. But Australia doesn't have an official office. It is all done through Manila, which is an interesting one. Now, I believe you can potentially claim through Centrelink in Australia, but I'm yet to see someone do it, and I don't know how easy that is. But officially, you can qualify through Centrelink, and they sometimes will prompt people to actually claim their benefits from overseas, because as you'll see later, it's actually in their interest to do that with the way Centrelink makes payments. But yeah, that's essentially, this is the office, and this is the website that you will need to visit to be able to begin the process of claiming your Social Security from abroad. So Ash, you might want to go into this paying account?
So the mechanics of actually receiving your benefit looks like this. So of course, with the Office of Earnings and International Operations, the acronym always makes me think of Old MacDonald, right? The OEIOO. So for those of us with kids that still sing these songs, so the mechanics of this means you need to set up an international direct deposit. They're happy to pay to many countries, except, as you can see, Iran, North Korea, or Cuba. Thankfully, we're not hosting a webinar today talking about those three countries. So Australia is certainly eligible for that. It's absolutely possible to set up payment to receive that in Australian dollars. Okay, next we have, what if my spouse or dependents never lived in the US? Are they entitled to receive benefits? And the answer is yes. And we'll come to this in more detail with the live case study, not the real life case study that I have at the end of the presentation here. And that's in part because of the totalization agreement that Australia and the US have. I'll talk a little bit more about that in just a moment here. But essentially, if the US spouse is eligible for Social Security and they become eligible, as you'll recall from the prior webinar, with 40 quarters of eligible coverage, that is paying Social Security taxes, essentially, then the spouse is eligible for that coverage. Now, that is not going to be the case universally. That applies really, as you would have inferred listening to what I just said, where countries have a totalization agreement with the US. So I've done a lot of research on this, and in the 1980s, the US introduced this because there were a number of workers coming over from Mexico and the Philippines, and as John was indicating earlier, because one's legal status is entirely unrelated to their Social Security vesting, there were many claimants back in Mexico and the Philippines of individuals who had vested in Social Security, and now the spouses and kids and so forth in these foreign countries are receiving these benefits when they may not have been legally having entered the US in the first place. So that's how this rule came about. Another one, just to let you know, if someone says to you, this is not true, you can't receive Social Security overseas, there's a rule that you can only receive it for 6 months, and then you have to return to the US for a full month in order to continue coverage. That's actually correct in the absence of a totalization agreement. So that's the default rule, but where a totalization agreement exists, it overrides that. So you don't, in fact, need to go to the US. There's no residency requirement, which isn't the case as we learned recently with the Australian aged pension, which we'll talk about quite a bit later on. So what is a totalization agreement and how does it affect you? It's really an agreement that's come about, a type of agreement that's come about to totalize the Social Security taxes that a globally mobile individual would have paid over the course of their career. So Sandrine wrote in with a question asking about how she gets to her 40 quarters of coverage, and we'll address that in due course throughout today's presentation. But this is essentially what Sandrine is alluding to. There's a totalization agreement where, in theory, and fingers crossed, hopefully in practice too, Sandrine would be able to get credit for time worked abroad, given that, well, I must presume that Sandrine is an American citizen, because that will be an important point as well. So totalization agreements are bilateral treaties, as you heard me say, to coordinate Social Security benefits with similar programs abroad. If an individual has accumulated more than or equal to 6 credits in Social Security, then their work in countries that the US has a totalization agreement with can be counted towards that 40 credit minimum requirement. Thus, as you can see, working years are totalized, hence how we come to that interesting word, totalization, where a partial benefit will still be paid out of the US Social Security system despite having paid into the US Social Security system for less than 40 quarters. So it is it does open up interesting possibilities where someone with fewer than 40 quarters can actually receive a benefit of some kind. I think the assumption is that they would also be eligible to receive a benefit from a different country, but we know that that is far from guaranteed. I'm just looking at the Q&A right now as we're going. I like to make this a little bit interactive, so that way we don't save questions to the end and we can just kind of address them as they come up. Colin writes in, I am a self-employed US citizen residing permanently in Australia. I have made my 40 quarters of Social Security contributions in the US. Does the totalization agreement between the United States and Australia exempt self-employed US citizens who reside in Australia from having to pay US Social Security tax on self-employment income? How does one document this for the IRS to avoid paying these taxes? Okay, wow, what a great question. There's so much involved in answering that question for Colin. So my first point would be residing permanently. John, that's what jumps out to me when I read Colin's question. That to me suggests that he's a primary Australian tax resident. Now, what we know about the US, is you hear us in almost every single presentation we run, is the US taxes you on a global basis. It's referred to as citizenship-based taxation, but that's not wholly accurate, because even if you're a permanent resident, you'll still be taxed globally, no matter where you are, as if you were a US citizen, even as a permanent resident. So that's the first point I'd make, is if Colin is residing permanently in Australia, it would that to me seems like the most pertinent thing. So you wouldn't have to pay Social Security taxes because you're not a primary tax resident of the United States. If, however, you weren't residing permanently, you were saying, I'm a US citizen who's in Australia for 2 years, but I retain my primary residence, I've got a dog, my kids are back in the US, the whole host of factors that would indicate in a residence tiebreaker exemption situation that your primary residence is actually the US, then you would probably be well advised to continue paying that, to continue vesting and building your earnings record to hopefully improve. It's not a perfect correlation, but to have that earnings record to get your Social Security benefit later. And then also the US federal tax rate is almost guaranteed to be lower for you than what the Australian tax rate would be, because you'd be taxed as a US citizen. So I don't think your situation would apply. You'd have to worry about US Social Security taxes to begin with. But back to the presentation here. So what we have is a wonderful picture put together by Michael Kitsis's team, showing us the 31 countries that the US has totalization agreements with. Next, what is the windfall elimination provision and how does it affect my benefit? So this is something I'm excited to share with you, because I've learned a lot more about this recently in my readings and interactions with the Office of Earnings and International Operations. So a US recipient, most Americans will know about the windfall elimination provision in the context of receiving multiple pensions. So it's designed to prevent double dipping. But I think the way it works with Aussie expats is it's not entirely fair, but as John alluded to, it sounds like Centrelink do some things. They're quite happy to pass the bill onto the US, and the Americans are quite happy to cut the bill where they can within their rules. So the windfall elimination provision applies if you're the beneficiary of a foreign pension. Now, we have to be wary of that word pension. Pension is a word that varies in definition depending on the country that you're in. In the US, pension really means an income stream paid from a government agency or an employer. In the UK, the definition that they use there is any defined contribution lump sum set aside for retirement at all. So people say, do you have a pension? And when I hear that, I think, oh, do you mean an income stream, or do you mean an amount of money set aside for retirement? Because it can mean both things. In the context in which the US is using this here, pension, they mean both. So they're covering their bases with this. So the Social Security Administration has deemed that hybrid public-private pension systems such as superannuation are pensions for the purposes of the windfall elimination provision. However, one way to get around this is if you have, and this goes back to Colin's question a moment ago where I was alluding to an earnings record, if you have more than 30 years of service in the US, you avoid the windfall elimination provision altogether. US persons working overseas must consider whether and or how much of a US Social Security benefit they can expect to receive. Now, I'm just going to show you something here because it's it's something that I've learnt recently, and I think you'll be very interested to know more about this. So 1 second, I'm just going to find the right screen, and I will share this with you here. Okay, no, that's not it. Sorry, just trying to. Okay, found it. Determining if payments are a pension. Now, what we're looking at here is the program operations manual system. This is what they use at the Office of Earnings and International Operations to determine your WEP reduction. And so in reading this in great detail, as I did, I came across a theory and a strategy and angle that I'll share with clients. I don't think I'll go into it today's call, but we're still working through the nuts and bolts of it. But essentially, there is a strategy that's in the skunk works, so it's in development, where we can essentially split aside employer and employee contributions, and then have only the employer contributions count towards this WEP reduction. But that will be unwrapped in the fullness of time. So what I want to show you here right now, I'm going to pull up my handy dandy calculator, is this actuarial lump sum award and the reduction in benefits that they use. So let's say you happen to be 67 years of age, you're going to take your Social Security benefit, you listened to this wonderful webinar that John and Ashley provided, and you learned about the POMs and the WEP. So you'd come here, you'd go down to age 67, you see this divisor that they have here. That's intended to be, in case you're wondering, the average life expectancy in months remaining for a 67-year-old. Okay, so what we're going to do is we're going to assume that 67-year-old has a, John, what's the number? A 67-year-old has an $800,000 super account. Does that sound like a good number to you?
Yeah, that sounds pretty good to me.
$800,000. Now that's Australian dollars, and we know that today that it's at 67.3. That would be $538,400 US dollars. Now we're going to divide that by 168.9. And it's equal to, for the purposes of the windfall elimination provision, they are going to say, well, you are receiving a pension equal to $3,187 because of your 800,000 Australian dollars superannuation balance, and reduce your benefit commensurately. So that's how the windfall elimination provision works. Okay, I'll return to full screen. I've got this handy dandy diagram. It's mostly US centric here, but this helps us figure out who is going to be hit by the windfall elimination provision. Will you receive a pension from an employer that did not withhold? Well, certainly Australian superannuation didn't withhold for Social Security taxes. So yes. Do you qualify for Social Security benefits from work you did in other jobs? No. Sorry, do you qualify for Social Security benefits from work you did in other jobs? No. There it is. Bad news, everyone. Sorry, I must have done this incorrectly. Do you qualify for Social Security benefits from work you did in other jobs? Let's say yes, because I did that work when I was back in the US. I vested way back when. Are you a federal worker in FERS or retirement? No. Is your only pension from railroad employment? No. Will you have 30 or more years of substantial earnings so that's the get out of jail free card. If you've worked in the US for 30 years, WEP doesn't apply. In which case, if you don't have that, then there is a proportionate reduction when you have less than 30 years. So it's not a binary. It hits you or not. It will affect you in a reduced manner, but the windfall elimination provision would apply to reduce your Social Security benefit. John, I believe this is back to you. Which country has the right to tax your Social Security benefits?
Yeah. So essentially, and looking at an example of a US citizen living in Australia. Typically, pensions are taxable in Australia, foreign pensions. However, the double tax agreement between Australia and the US clearly specifies that pension payments by a foreign government are exempt by the other country. So any payments from US Social Security essentially is not taxable in Australia. It's fully taxable in the US, and vice versa. So Centrelink payments, age pension payments from Australia are not taxable in the US because of the double tax treaty. So for the US citizens living in, US or non-US taxpayers, I should say, if you're not needing to file US taxes anymore, if you've foregone your citizenship or green card, or you've never had the US permanent residency right, then there is a withholdings tax, which is at the bottom of your screen there, which is 25.5%, which gets withheld. But for normal US taxpayers, then it will be just completed on your usual US income tax returns, not on Australian income tax return, which is a positive thing, because as Ash mentioned, typically the Australian system will tax you at a higher rate.
We have some questions coming in here. Alan's asking, is my industry pension plan monthly payments taxable by the ATO? That's one for you, John.
Now this is looking at I'm assuming this is a normal industry superannuation fund, account-based pension over the age of 60. If you're drawing an account-based pension in Australia or an industry pension, it is not taxable if it's an Australian superannuation. If you're looking at a US 401k or an IRA, typically that will be taxable in Australia, the drawdowns. It's superannuation drawdowns after 60. It's a US industry plan, so you're looking at either IRAs or 401ks, I take it, Alan. Yes, they will be. It's typically the growth portion that will be taxable. So well, not what you... Yeah, sorry, Ash, you go.
John, I think this is one of these ambiguous instances of pension. So now that Alan has clarified that it's a US industry pension plan, to me that says it's an income stream. So it's an income stream paid by a private employer in the US. And if Alan is permanently resident in Australia, despite being an American citizen, which we don't know because it's not mentioned there, then that would be taxable in Australia. I mean, is a primary Australian tax resident, taxable in Australia. So yes, that's how I would. So it's funny how it, depending on what it was, if it was an Australian account-based pensions, John was saying that not taxable, but because it's coming from the US, living in Australia, that's what would happen. John, I'll come back to my real world example. I think I got to apologize, we had a slide here dealing with Christine's question. So maybe we should just jump straight into that. Christine asked, I'm a US citizen living permanently in Australia. Can I get both my US Social Security payments and claim an Australian pension?
Yeah, so technically, yes. Technically, yes. Now this is where it's important to look at the difference between Social Security and the age pension and how they're assessed and how you will qualify. So the Social Security, as we mentioned, is based on quarters of work and it's an earned entitlement. Age pension in Australia is based on eligibility from typically it's increasing to age 67. So you'll be eligible from age 67 and is assessed based on income and assets. So it really is more of a welfare system in Australia. So you could have paid your taxes for 40 years in Australia, met every tax bill by the ATO. But if you go over a certain threshold of assets or income, then you won't qualify for any benefits at all. And those thresholds at the moment, they do vary based on your personal situation. If you own a family home, that's always exempt. The asset value of your family home is exempt. But pretty much everything outside of the family home over the age of 67 will be assessed, including contents and superannuation value and any foreign, pension accounts like your 401k or IRAs. investment properties, everything outside. And the threshold at the moment for a single is 622,000 that you get any kind of pension at all, or for a couple, it's around about 935,000 where you get a par pension. And you know, if you're 930,000, you'd be getting, you know, probably $25 a fortnight. It's proportional, and the payment over certain thresholds diminishes until you hit that $935,000 as a couple in assets, and then you will not qualify for any benefits at all. So to answer the question, you can potentially, but you would have to have essentially a low level of assessable assets, you know, under that threshold. And the thing will be, and this is why I mentioned earlier, the ATO is very keen for people to apply for the US Social Security, and they will proactively send out forms to people to potentially apply for their overseas pension, is because there's an income test as well, and having a certain level of income will actually reduce the amount of age pension that you receive. So the Australian government loves you getting your US Social Security check, because that means they need to pay less. So yes, in theory, but in Australia, I mean, ideally, you know, everyone's got different circumstances, but you hope to build yourself up into a situation, and the industry, the system is designed to push people to self fund their retirement, and
Yeah.
you know, that's the ideal position to get to, is to self fund, because really it's a welfare system where they're saying, okay, we don't think you've got enough to meet what you need in retirement, that's why we'll give you a payment. The minute they think you've got enough, they'll say, no, we're not giving you any more payments, essentially.
It's interesting how the two countries approach the same thing. So the US, you'll get a tax deduction for contributions into your 401k. The matches are much lower on average than what you'll see with superannuation, 10.5% going into super. It's a mandatory employer contribution. In the US, the safe harbor amount is somewhere like 3 or 4% that your employer will contribute to your 401k. Very rarely do I see above 7%. Very, very rarely. So it's more reliant on discretionary individual contributions going into retirement accounts. Pensions, meaning income streams that one gets from employment, are increasingly rare in the US. The 401k was introduced in the late 1970s as a way of offering really a cherry on top of the pension cupcake. And then in the 1990s, and especially the early 2000s, when there was the tech wreck, major market corrections, 9/11, suddenly companies found themselves liable to pay these pensions out, and life expectancies were increasing, and so it became this liability. And so eventually, what used to be a robust retirement system with a pension and a 401k, they took away the cupcake, and now it's just the cherry that's left for retirement.
Sorry, Ash, you keep going. Sorry.
Well, another comment I wanted to make about that question there was to qualify for the Australian age pension. Not only do you need to qualify as per what John was mentioning there with income and assets, but if you were to say execute the strategy that you might hear in the FIRE community, the Financial Independence Retire Early community, and take your Australian age pension, take your Social Security, move to a beach in Bali and live the good life there, not so fast, because it turns out there's a 2-year residency waiting period in Australia. So not only, let's add the conditions up, not only do you have to have a low amount of assets, a low amount of income, if you had a Social Security pension or Social Security benefit paid to you, that's going to reduce your Australian age pension too. Now there's a 2-year waiting period, and only if, after all of that, only if you meet the Australian residency requirement and have lived and worked in Australia for 30 years, would you be able to continue taking that benefit from the beaches of Bali. So it's practically impossible, and not actually impossible, but I have never heard of an individual that would qualify, make it through all those hoops.
And just to clarify, I think Ron has just asked in relation to the thresholds I was talking about for the age pension. It's net value. So if you've got a liability against certain assets, I think that's what you might be asking there, Ron. That does come off the value. So it's the net value less any liabilities that they will look at.
Christine asked 30 years. Yes, John sent me, I think I was at my daughter's gymnastics when I got your email on the weekend, John, and that's when I recall reading it. And yes, it's 30 years you need to be, and there's even an acronym for it. It's like Australian working age life or something like that, and it is in excess of 30 years.
Yeah.
Joyce asked, my US 401k is tax exempt in the US when used for housing. Does the ATO tax it? That's really a great question for a cross-border CPA. And so, Joyce, before even answering that, I want to refer to our disclaimers at the beginning of today's presentation. However, when I look at that, I think to myself, well, it's almost certainly taxable by the ATO because Australia needs to make sense of the account and tax it through the Australian tax laws. And it looks at a 401k. It looks at its tax laws and says there's no section 401k in our tax code. What is this thing? And they tax it as a foreign trust. And where, as John was saying earlier, that's where the growth is taxable at ordinary income rates in Australia. And the corpus or body of that account would be made up of the employee plus employer contribution. So I don't think you're going to enjoy that preferential tax treatment in Australia on that 401k. Shane asks, John, if it's okay with you, maybe we could just take a stab at Shane's question, and then I'll run through that the real life case study.
So Shane, it mentions that dual citizen receiving 100% disability payments from Australia, can I still claim Social Security in the US? I've worked greater than 6 quarters in the US and about 25 years in Australia. That alludes to Ash, your comment on the equalisation agreement, where the 6 quarters plus work in Australia that counts towards it. The answer would be typically yes, that you could qualify, but definitely go through the Social Security office in the Philippines, because it is one of those things that I think in my experience and what I'm sure you've seen as well, Ash, that when there's these total equalisation agreements, it is best to go through the Social Security office, because they want to see evidence of work in Australia that would qualify for, and you'll need to provide them with evidence of that, that you met the extra quarters from your Australian work as well. So, but technically, yes, would be my answer. So
Shane, as you're about to see in the real life example that I'm going to give here, the problem we all experience with the Social Security Administration is, to my knowledge, and I'd love to crowdsource, if anyone's heard differently, then please share with all of us, because we'll all be better off for knowing. There's no ombudsman, there's no appeal process, no formal appeal process. It's what that case officer says to you generally goes. Now, the trouble there is that they're not always the most informed. And as John has certainly experienced, often we're educating them on their job and the appropriate entitlements that our clients are deserving of. And so in your instance, it may be an uphill battle for you to make that case to them if you don't get a favorable outcome. Okay, so moving on to this real life case study. This came from a fellow financial advisor. She's an American woman, married and living in New York, married to an Australian. However, I believe he is resident in Australia. So that's their situation. So she wrote in and she provided this summary of what's happened here. So in January 2021, my non-resident alien husband, that suggests he doesn't live in the US. That's that charming term they use for non-US people. Husband filed for half of my Social Security benefit, because that would be the spousal benefit, as we know from our last webinar. You get 50% of the worker benefit or your own worker benefit, but in his case, he's not going to have a worker benefit because he's neither lived in the US, nor worked or paid Social Security taxes in the US. So he should get 50% in theory. So 6 months later, he made an appointment with the US Embassy in Melbourne to certify the documents needed to prove he was eligible for spousal Social Security. A month later, embassy meeting was rescheduled a few days later. Well, then again, there was lockdown in effect. There was COVID. So then the next appointment was canceled due to COVID. So they finally get together in September. Social Security in Manila calls Harry, and I've changed names for confidentiality, and they have a chat for 30 or 45 minutes and ask him to send certified copies of his marriage certificate, divorce certificate, birth certificate, banking information for his Social Security payments. A few weeks later, Harry couriers the requested certified paperwork to Manila. And by the way, it is possible to get things notarized at the embassy, but other than that, there are databases you can find of US notaries around, but you'll typically be paying $50 to $100 to get one of those signatures. May 10th, 2022, Harry receives approval to receive Social Security, which was to be paid from as of February 2021, which is his entitlement date. However, he doesn't have a Social Security number. Of course, that's why we have Social Security numbers in the first place. So he needs to apply for one. In June 2022, he was approved for Medicare Part A and B. That's entirely useless because he lives in Australia anyway, so he has no need for it. And he declined it originally in his interview anyway, so they're not paying attention. July 4th, they wrote emails to Manila and asked how to get a Social Security number. July 29th, they received confirmation of an appointment at the embassy again for August 3rd, 2022, or almost a year later from when they were last at the embassy. And then on August 3rd, they get their Social Security number and a letter from the US. August 3rd, Harry goes to the US Embassy in Melbourne to have the original paperwork that he had previously sent to Manila certified by the embassy, who then sent certified paperwork to Manila. Okay. September 30th, emailed Manila to ask how he could register online in the US without having a US address, and never received an answer to that one. Now, clearly there has to be a system for that. With the fact that there's totalization agreements, it is possible to receive benefits abroad as a non-resident alien. There simply must be a way for that to be resolved. October 17th, forwarded the September 30th email and asked for a reply to the October 18th and asked for a reply. October 18th, received a reply from Manila saying that they had requested the Social Security update benefits record. November 9th, 2022, just a few months ago, emailed Manila to ask for clarification of Social Security benefits as they were not 50% of his spouse's benefits. I have an update for everyone here. The theory is, I spoke with this lady earlier today, and the theory is that his benefit, not only would it be withheld for taxes, as we've already discussed, at the rate of 25.5%, but in the application process, they probably asked about his super, and so there was probably a WEP reduction as well. Nevertheless, as far as Harry's concerned, it's still free money. I mean, there's no complaining about it. It's money that he would never have been entitled to had he not married that American citizen who was eligible for Social Security. So December 4th, again, emailed Manila requesting clarification of the benefits. Received an email just restating the benefits, not addressing the fact that they were incorrect. This is what I mean about being forewarned is being forearmed, insofar as being a smart consumer, knowing what you are entitled to, knowing the rules and so forth, so that you can understand why you're getting the amounts that you're getting. December 5th, replied to Manila asking for them to explain the benefits, but they were incorrect. January, again, emailed, they didn't reply, then received an email from Manila restating all the same incorrect benefits. Then same thing again, just a month ago, received an email from Manila explaining the taxes, but not the benefits. This to me says that they don't understand how the WEP is applied. That's my leading theory. I can't say that for sure, but it's probably that's what's going on. February 20th, received an email from Manila restating all the incorrect payments. Currently, Harry is not receiving half of the lady's Social Security payment, and we were wondering who to contact next. And the trouble is, It's really figuring it out for yourself, in which case you may determine that actually it is correct because of the WEP, or being able to escalate this somehow. I think it's going to be very difficult to do from abroad. One of the ideas that we have is contacting your senator and trying to raise the flag with them. But as to the best of my knowledge, there's no way other than what appeals you can make in hopefully getting satisfaction. So we'll answer a few more questions before I move on with the other slides, just talking about next month's presentation. Eleanor writes into the chat, I'm still in the US working and have achieved 40 credits and would be eligible in a couple of years to withdraw my Social Security. Should I take it before heading back to Australia and accessing my superannuation to avoid the windfall tax? That's a really good question, actually. That's a really good question. And I think my answer would be, depends on your age, depends on your financial circumstances. It is a little bit like asking how long is a piece of string in a way, because for me to provide a recommendation, or John to provide a recommendation on that, we really need to know your whole financial circumstance, because one of the key things to keep in mind is the 8% increase between age 67 and 70. So your benefit's going to be increased for those years. And it's going to depend on the balance of your super account. If you don't have much in super, then you're not going to see much of a WEP offset. Also, how many years did you spend in the US? If it's above 30, it wouldn't apply anyway. So there's just simply too many variables to even try and have a decent approach at answering that. Ron also might be reduced for early claim. That's true. You can take it as early as age 62. Before age 67 is written there. So anyway, I don't think we have anything else, or do we? Christine writes in here, when can your spouse claim your Social Security benefit? Christine, I'd encourage you to watch the last webinar. We dealt with that question in there, and it's a combination of factors. It's you've got to be taking your worker benefit, and they've got to be of a certain age to be eligible. Thought you had to be deceased for them to get it. No, that's your spousal benefit is payable during life. It swaps over to be the primary worker benefit when they pass away. Colin, this is not inconsistent with our experience dealing with Social Security. Okay. To know the first challenge, however, is actually getting someone on the phone. Yeah, I don't think it's past time to say that the quality of service from the IRS in particular is deplorable. It's absolutely disgusting, and this is what we get, with funding cuts to the degree that that have taken place. Well, I know we're not talking about the IRS right now, but it's the same. It's all the same kind of thing. Just for information, I contacted my state senator in Rhode Island, and they are more than willing to help. That is good news. Okay, good for Shane. So just to carry on here a bit, next month, I'll be doing a webinar on giving across borders, options for tax-effective gift giving. That's actually only 3 weeks away for us here in Australia. It's still February 28th for those watching from the US. So you're welcome to join me for that. And if you're looking for any more information, then feel free to come to our website. If you want to find a time to talk, then you can click on that Get Started page there. We've got a few more resources available. We've updated the key financial data sheet since 2021, so you can access that there. And just want to see if there's any other final questions, comments, doubtful points in the time that we have here. And there is from Lindsay. John, do you want to take this one?
Yeah, I'll have to. It's a long one, so I'll have to go through it. I'm an Australian citizen. I moved to Australia 1 year ago, so this will be my first US tax return claiming. Income from Australia, independent contractor, run your own business in Australia. Question relates to self-employment tax. Accountant says that you need to pay self-employment tax on my net income. However, I'm reading conflicting statements. Can you elaborate on this today? Might be something potentially for a CPA to look at.
Yeah, well, it is. That's right. But Lindsay is unfortunately experiencing the gap in knowledge, and that is an Australian CPA knows about Australian taxes, American CPA knows about American taxes. What you really need is someone who has expertise in this area. I could make a referral. There's many different accountants that we have worked with, but in your case, Lindsay, I'd say go talk to Heinz and Clark, Steve Heinz, out of Minnesota. Just look him up online, and you should get some straight answers there. And it's a difficult one, and it's one I've actually faced given my situation. I'm a tri-citizen, as you know, moved to the US for moved to Australia for a couple of years, and I found the same kind of conflicting advice. And essentially, it boils down to the facts and circumstances of where you are primarily resident, the length of your stay, and so forth. So it's actually possible that both of those things could apply. You could still pay Social Security taxes if you're planning to move back, but if you're staying in Australia permanently, then I would say that would not apply anymore. I don't see any other questions here. No other chats. It's been wonderful.
Yeah, sorry, Ash, very quick one. John mentions 26 years working in the US, but 13 in Australia. Is he still subject to WEP? I think the answer is yes, but watered down, given you 30 years in the US, yeah?
Yep. And you might even find some WEP calculators online, John. It's so specific that, like many of the questions we've had here today, it's so specific to your circumstances. But the IRS actually makes available a calculator, so you could go and do some digging on that. And I think what John said right just now is correct, and that is that there wouldn't be much of an effect with that much of an earnings history in the US. All right. Well, thank you so much, John. Appreciate your insight here and input into today's webinar. It's been wonderful.
Thanks for having me.
Absolutely. And we'll look forward to hopefully seeing you all in a few weeks' time for tax-effective gift giving. Thanks so much. Have a wonderful rest of your day.
Bye, everyone.